What's up, guys? In today's video, we are going to be going over our profit and loss statement, or otherwise known as income and expense sheets, for our very first full year in our lawn care business. If you own a business of your own, whether it be in lawn care or any other industry, it is extremely important that you start and begin to track the numbers, especially in your early days, so that way you can, number one, implement and build a habit of tracking the data and the numbers, and number two, it's extremely important for the health of the business to make sure that at the end of the day, you're not spending more money than you're making. Now, there are different ways to track these numbers using QuickBooks or an Excel spreadsheet and plenty of other softwares out there that do this. But at the end of the day, figure out something that works for you. Now, when we were first starting out, what we did is an Excel spreadsheet. We just used, I put together this data, put on an Excel spreadsheet, and tracked it that way. So at the end of every month, I'd go into our bank account, figure out these numbers, transfer them and categorize them, and figure out how much money we're making and how much money is going out. Now, fast forward 4 years, we successfully have built a $630,000 in annual revenue lawn care business, and my wife and I own three total businesses, one real estate company and 2 lawn care companies. So let's jump into the numbers. All right, so as I said before, this is the P&L statement of our very first full year. Now, the reason I say that is because the year prior, we actually started in May and went all the way to the end of the year. So we did have a little bit of a leg up, and in that year we did roughly $22,000 in total gross sales, and I think we went negative. I think we spent $25,000 that year, so we actually went negative $3,000. Okay, now this may seem like a very boring video, but this, I'm telling you, is extremely important, especially when you're in your beginning days of owning a business. You definitely have to track these numbers. Now, if you look here, so the 2 ways that we can actually get paid are through checks and credit cards. Now, in the beginning days, we took any form of payment. If somebody had $1, we were taking it, whether it be cash, coins, check, whatever, ACH transfer, credit card, Zelle, Venmo, I mean, Cash App, they're all over the place, right? But what happens is, and look, at the beginning of your business days, that's fine. Take all of the money that you can and take all those different forms of payments. That's okay. But as you begin to grow and scale your business, it becomes a full-time job of collecting all of that money and tracking that data. So as you progress, it's not going to be perfect at the beginning, but try to get it down to maybe 1 or 2 different forms of payment that makes your life easier when you do this. Okay, so currently right now we only take checks, which are from our commercial properties, or credit cards, which is basically through our Service Autopilot CRM that we use. All right, now over here, again, your cost of goods. So we basically break it down into 2 main categories. So you have your cost of goods and then your expenses. So cost of goods are basically going to be your basically things that fluctuate. Okay, and again, this income and expense sheet isn't perfect. Some of these categories might be a little off, but generally speaking, from accounting terms, cost of goods are basically fuel, right? If there's no jobs, you're not going to spend money in fuel. If there's a lot of jobs, that cost will go up. It is a variable cost. It goes up and down each month, depending on the type of work you're doing and the amount of work you're doing, right? So we're in a seasonal business. So December, January, those fuel costs are way low. June, July, August, and summer, they're way high. So it's a cost of doing business. It's a cost of good. So that will fluctuate. Now, supplies are the same thing. Generally, what falls under this category is like sod, mulch, anything that you need to complete that job. Trimmer line for the weed eaters. You know, just all of that stuff that you really need. Plants, if you're installing plants. Okay, now we have a variable cost up here for labor, because this is more of your day rate laborer. Okay, so this is somebody we call kind of last minute, pay them cash, pay them check, and really just use them for like a day if we're in a pinch. These aren't actually our W-2 team members. So this is, again, a variable cost. Now, if we jump down here to expenses, so advertising, you should have a budget for advertising. And again, this might be a little advanced for a lot of people out there just getting started, but just get the basic principles down, right? So you're going to have to spend money on flyers, EDDM, signage on your trucks, Google Ads, which I don't recommend when you're starting out, but some of those basic concepts, right? Just print off some flyers, go door to door, just get started, right? You're going to have advertising. Repair and maintenance is going to be your, oil changes, if equipment breaks and you got to get it repaired, trucks, stuff like that. Insurance. So when you're starting off, definitely would recommend to eventually get some insurance. So different type of insurances that we have is general liability. So we have up to $1 million in just basic general liability. If something gets damaged on the property, generally we are insured for liability insurance up to $1 million. Workers' compensation insurance if somebody gets hurt on a property. Again, we do this to protect our customers and clients because, we protect and protecting our team members as well if they can't work. Okay, so definitely going to have that. Now, utilities, I definitely put this in here. We don't, the reason it's actually blank for this year is because I actually didn't put the numbers in, but ultimately speaking, you should and absolutely need to, I highly recommend this. This is what we did, is we actually measured out the office, actually this office that I'm sitting in right now. I think it was like maybe, 15 by 15 room or something like that. But basically what you want to do is all the internet bill, water, electric, gas, all that stuff's right off. Is a write-off at the end of the year. So just because you don't have this big shop doesn't mean you don't have utilities to pay for. So basically what you would do in that scenario is you just take a percentage of that office space based on the square footage of your house. That would be your percentage that you could write off for the year. Okay, computer expenses. So this is going to be like new laptops, phones, stuff like that. Office supplies is going to be more of your like printer paper or pens and paper pad. Meals. So anytime you're out discussing how to move the business forward or having a meeting, you can absolutely write off meals. So we definitely do that. Wages. So this is where our W-2 team members get paid from. Again, this is our first year in business. I think I was out there doing all of the work, and I maybe had one or two part-time helpers at that time. So very minimal wages. Honestly, you could probably add a 0 to that nowadays where we're at in the same business with the amount of wages that we pay out. So giving. So this is really good. In our very first year, we actually tithed based off of the top line revenue, and it was incredible to see the fruitions of that. And ultimately speaking, like, we weren't really doing it for anything in return. We're obviously a faith-based company, and my wife and I, we are believers, and we put him first in everything we do, and we've seen he's blessed us tremendously 100 times over. And so, I mean, this business is his. The house that we live in is his. Our car, our equipment, our team members, they're all his. So, we just give our first 10% back to him, and which is what we did this year in that first full year. Okay, so equipment. So this is going to be your trucks, mowers, equipment, basic stuff here. Taxes. So this is going to fall into your sales taxes and income taxes. So or federal taxes. So it's going to be all of that stuff. Uniforms. So we obviously pay for uniforms, shirts, 5 shirts for each team member to get the logo on it. Again, what that does is separate you from everybody else, from the Joe Schmo out there in the truck, doesn't have logos on his truck. It's not in uniform. We want to present a professional kind of approach there. Creating business expense. So this is going to be, filing a DBA, filing an LLC, all that good stuff. Education is going to be books or any type of paid training to improve your business. Hard location. So we ran our business out of I think one storage unit during that time. So that would be your hard location, and then landfill costs for basically anytime we go to dump, it's like $25. But this is the profit and loss statement for the first year. So wrapping this up, what I wanted to mention is that when I look at these profit and loss statements, so again, I do this each month at the end of the month from the previous month. All I really want to look at is the bottom line. Okay, so on this bottom line, it either will show a profit or a loss. Okay, so this is really all that I'm looking at. There are other key performance indicators that I'm not going to get too deep into on this or even discuss, but if you aren't doing this, you need to start now. It doesn't need to be this fancy thing on QuickBooks or any other kind of software. It could simply be an Excel spreadsheet, and it doesn't even need to be this fancy with colors and all this extra stuff. Just put income minus expenses equals your bottom line. And for that expense category, all you want to do is just list them out, okay? Just put them into categories so that way you can go back, look at the data, at what it costs you to build your business, so that way you can use this data for the years to come. I can't tell you how many times I've gone back and looked at the previous year and it's like, okay, what percentage of the revenue did we spend in equipment? Well, let's do the math. That's a great question. So this year in equipment, we spent $10,000. Well, I would imagine that's one extra truck and some mowers and weed eaters and blowers. So simply what you would do is take, okay, where are we at here? Equipment, so $10,142.28 and divide that by your total income, 121,810.75. So 8%, if you convert this decimal to a percentage, 8% of the revenue that you generate, you put towards equipment. And this is in a business that's in growth mode, that's growing really quickly. So what you can do confidently in your mind, we don't sit down and do a budget every month for like the months to come, but we do allocate money. And if you haven't checked out my video yet, I definitely recommend doing that because we have 14 bank accounts and it might be a little excessive, but I'm very meticulous and I want to make sure that we have the money for what we're purchasing. But for our profit first bank account system, I'll put the link in the description below. If you haven't checked that video out, highly recommend it. It shows you how to set up your bank accounts, especially in the beginning. You want to build these habits so that way you can build a successful business that sticks around long term. But generally, going back to this, so 8% of the revenue needs to go to equipment. So I know next year, even if we do $300,000 next year, right, you're still going to generally keep the same path that you did this year, where you put 8% of the revenue away for growth. So if you theoretically do that, so all you do is multiply this times, let's say next year you basically triple and go from 121,000 to roughly 300,000, right? So if we multiply this and we're putting away 8% of the revenue for equipment, then we know we will have a fund of roughly $25 to spend in new trucks, new equipment, new weed eaters, edgers, blowers, all that stuff that we need to be able to operate. All right, so that just about wraps up everything. Again, if you aren't doing this already, I highly, highly recommend. You have to keep track of your numbers. If you aren't keeping score, how do you know what the heck the score is? How do you know if you're winning or losing? You don't. You have to know your numbers. Again, it doesn't need to be fancy. Put it on a Word document or Excel spreadsheet. Excel spreadsheet's easy. It's free. You just watch a YouTube video on how to do different formulas of subtracting this Excel or this cell minus this one. Like, it's not that hard, okay? Nonetheless, if you guys made it to the end of this video and found value in this, please hit that like button. It definitely helps out the channel. If you guys like this kind of content, please put it in the comments below. This is our first year in business, profit and loss statement. I can go through year 2, year 3, year 4, but I want to do stuff that brings you guys value. And if this is not that high of value, I probably won't continue to make videos like this. But if you guys tell me and communicate that to me, that this is super helpful for your business, this does show you what a lawn care business should do in the first full year, then definitely let me know. I can do year 2, 3, and 4 and show you all the way up till this year. But yeah. If you guys haven't already, I do have a course on fertilization and weed control. If you are looking at adding that as a service in your lawn care business, highly recommend that. It's not expensive at all. It's $49 for the course. It's about 15 videos and goes over all of the basics that you need to know when you are just getting started. Alrighty, we will see you guys next time.